Hello folks, this is David Schlossberg from Assured Concepts Group with an educational economic update for October of 2017. In this month's video, I'll discuss some of the major headlines that influenced the markets in September, and I'll also provide insight into what these developments can mean to you as an investor. As we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most of the quarterly data, one detail is certain. The major indexes performed well between July and September. The S&P 500, the Dow, and the NASDAQ all had positive performance last month and gained at least 3.9% for the quarter. And they're all up by 9% or more year-to-date in 2017. With all this growth, we have seen the indexes hit quite a few record highs. And the quarter's last trading day on September 29th was no different. Both the S&P 500 and the NASDAQ closed with new records, and the NASDAQ reached a new high for the 50th time this year. The Dow closed only 0.1% away from its record high and notched its 8th straight quarter of gains for the first time since 1997. The S&P 500 also entered the quarter up for the 8th time in a row, and the NASDAQ had its 5th straight quarter of gains. Between the recent weather disasters and geopolitical tensions, last month's positive market performance might seem surprising. But rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. Now, let's look at what happened last month and what might be on the horizon. Right before the end of September, we received the final reading of the Gross Domestic Product, or GDP, a critical measurement of the economy's growth. The data showed 3.1% growth in the second quarter of 2017. This reading slightly beat expectations and indicates that the economy is growing faster than many people anticipated. It's the first 3% GDP report in over a decade. According to MarketWatch, the latest readings of personal income and consumer spending increased in the last reported month of August. The services sector also showed growth, with 15 of the 18 industries in the ISM Non-Manufacturing Index reflecting positive readings. And after struggling for years, corporate earnings seem to be back on solid ground. Last quarter marked the first time in 6 years that corporate earnings had 2 solid quarters of growth in a row. But the economy may still have room for improvement. Based on a recent CNBC report, and contrary to the MarketWatch report, industrial production and retail sales fell in the most recent reading from August. And the Fed's preferred inflation indicator, the PCE, once again showed that inflation is far from the 2% rate that the Fed hopes to see. Nonetheless, the Fed has stated that it plans to raise interest rates 4 more times before the end of 2018. If inflation remains low, they may have to rethink this plan. One change the Fed will be making is to begin lowering their massive balance sheet this month. During the Great Recession, the Fed plunged trillions of dollars into the economy. The Fed now believes the economy is strong enough to handle a more normal monetary policy. And so far, the markets haven't had a strong reaction to the Fed's long-anticipated decision to reverse its so-called quantitative easing. But we'll continue to monitor this action and a variety of other economic indicators throughout the rest of 2017 and beyond. Looking ahead, many potential changes could be on the horizon, including tax reform. We're studying how any policy or economic updates could affect the markets. For now, if you have any questions about anything in the news or want more guidance on balancing your finances, we're here to talk. That wraps up this month's economic educational update. Please remember that nothing we talk about here is a recommendation, and if you'd like to discuss your personal financial situation, please call us at 847-426-1077. We'd be happy to talk. Once again, David Schlossberg with Assured Concepts Group, signing off for October of 2017. Thank you.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.